Hello teacher, my name is Cannibal and today I will present to you all about the financial analysis in Thanh Cong Stock Company, or we can call it SBT. So here's our table of contents. So first we'll give you some general information of this company through the introduction part, and then we'll discuss about the balance sheet and the income statement before going deeper into the ratio analysis. And in the fifth part, there will be some recommendations and conclusion will be listed out, and the last part is our reference list. So TTC Binhua Stock Company has first founded in July 15th, 1995, which was formed as the joint venture between Sugar Seeds Bourbon Group, Association of Sugar 2, and Thailand Sugar Association. And the company has always maintained its positions as the industry big brother, which means that the market share that the company account for up to 46%, and in the domestic market, and it also bringing its product to more than 24 countries, including some demanding market like United States, Europe, Korea, and Singapore. And the company currently has 9 factories ranging from Thailand, Hanoi, Junento, and even Laos. And the stock exchange on which its shares are listed is the Ho Chi Minh Stock Exchange. The ticker symbol is SBT. The company's independent firm are Ernst & Young Vietnam, KPMG Vietnam, and its headquarters is located in Tân Hưng Commune, Tân Châu District, and Tây Ninh Province. And here's is the SBT Board of Directors, with currently Mrs. Phun Bích Ngọc is the chairwoman of the board, and then we'll have 2 vice chairman and chairwoman of the board, and lastly is 3 members of the board. Moving on to the primary product lines. So the company is manufacture sugar, fruit blending sugar cane, including organic sugar, TTC, ATTA, PEU, rock sugar, goat sugar, functional sugar, liquid sugar, RE sugar, and last is the RS sugar. And these images below are illustrating some of their sugar products. Next is the company is produce and trading primary byproducts such as sugarcane flavor bottle, water miakware, and baguettes, and some secondary byproducts including commercial electricity, Lepsu caramel, and organic microbial fertilizers.
Hi, I'm going to guide you guys through the second part of the financial analysis from Binhua Sugar Joint Stock Company and the balance sheet. And here is the balance sheet of the company in the 3-year period from 2018 to 2020. To be more easier to look at, I've also composed a common size balance sheet, and we're going to through them each by each. But first, I might introduce you guys to the firm's main competitors, which are Lam Sơn Sugar Joint Stock Company and Quảng Ngãi Sugar Company. So we're going to compare the 3 firms in terms of assets, liabilities, and stockholders' equity. The first part, changes in total assets. Here we have the industry average here, and we assume the number equal to mean of the top 5 largest sugar company in the industry total assets. So including Binhua, Quảng Ngãi, Lam Sơn, Sơn La, and Con Tum Sugar Joint Company. So as you can see here, SBT and QNS, they are both their total assets are both higher than the average from the industry, whereas LSS, the number is lower. And next, we're going to compare the firm structure in current and non-current assets. As you can see here, for SBT, the number for SBT in current assets proposed for a larger proportion compared to its competitors, and the numbers from SBT is far more stable. When it current assets only fluctuated at around 56%, LSS current assets saw a decrease and QNS saw an increase. So to be more specific, we are going to the changes in the current assets. For SBT, the number fluctuated. It first increased slightly and then decreased again, reaching around 56% in 2020. For LSS, the number fell significantly by around 20%. And for QNS, the number increased at around 6% over the period. For the total non-current assets, the pattern is going to be reversed since the total assets is composed of only these two big items. So SBT fluctuated slightly, reaching 44% at the end of the period, while LSS increased significantly and QNS decreased slightly. We're now going through the second part of the balance sheet, liabilities, and it is also composed of the two big items, current liabilities and non-current liabilities. And first, we're going through the changes in current liabilities. For SBT, the number increased slightly in the first half of the period, but it then decreased, reaching around 49% in 2020. And for LSS and QNS, its competitors, the number both fell over the period, reaching around 27% at the end of the period. For the changes in non-current liabilities, SBT's number proposed for a larger proportion compared to its competitors. The number, however, fell significantly over the period, reaching 8.4% in 2020. And for LSS and QNS, the number decreased slightly at the first half of the period, but it then increased again. And for the last components from the balance sheet, the stockholders' equity, we're first gonna compare the proportion of liabilities and stockholders' equity of the three firms. So it is clear from the graph that SBT stockholders' equity accounted for the smallest proportion compared to its competitors, which means that while SBT's main financing source come from liabilities, LSS and QNS, they are mostly financed with stockholders' equity. And we go through the last piece, the changes in stockholders' equity. SBT saw a decrease in the first half of the period. The number then increased again and reached around 7,600 billion in 2020. For QNS, the pattern is reversed when it first increased and then decreased again, at reaching 6,600 billion Vietnam dong in 2020. For LSS, the number, however, stayed pretty much the same over the period, reaching 1,500 billion Vietnam dong at the end of the period. And that's pretty much the end of my presentation. Thank you for listening.
Cost of goods sold, expenses, and the basic EPS. Firstly, let's talk about the income statement and begin with the changes in total revenue of SBT and the average industry. As we can see in the graph, the SBT's total revenue was always higher than the average industry throughout the period. In 2019, they both experienced a slight rise to around 10,800 billion and 4,300 billion respectively. At the end of the period, the figure for SBT increased dramatically and reached a peak of approximately 12,800 billion, whereas the average industry's total revenue rose slightly to about 4,400 billion. Then, compared with the competitors, which are LSS and QNS, from 2018 to 2019, the figure for SBT and LSS both grew to around 10,800 billion and 1,700 billion in turn. In contrast, QNS total revenue decreased dramatically by about 350,000 million. In 2020, SBT continued to rise substantially and peaked at over 12,800 billion, whereas LSS and QNS fell to roughly 1,700 billion and 6,500 billion respectively. In regard to the cost of goods sold, SBT and LSS illustrated a slight rise of about 2.7 to 5% for both in 2019. Meanwhile, QNS decreased to 66.53%. In the next year, SBT kept growing slightly to about 83.55%, while LSS and QNS changed the trend by falling slightly to 90.51% and increasing to 66.54% respectively. Thirdly, let's have a look at the expenses and start with the structure in total expenses of SBT. In 2019, finance expenses and G&A expenses both fell to 48.12% and 26.13% in turn. By contrast, selling expenses and other expenses both grew to 33.4% and 2.55% respectively. At the end of the period, Finance expenses rose to 49%, and the selling expenses also had the same trend, with increase to 25.64%. On the other hand, G&A expenses fell sharply to 21.93%, and other expenses also decreased, but just only by 0.01%. Regarding non-operating expenses, in 2019, the figure for SBT and Q&S increased sharply by more than 4,000 million to reach 40,000 million and 7,200 million respectively. By contrast, LLS dropped rapidly from 7,100 million to about 5,000 million in the same year. In the last year, SBT rocketed and reached a height of almost 58,000 million. LLS also rose but just only by about 190 million, while Q&S dropped substantially to nearly 4,800 million. Looking at the basic EPS, three companies showed two different trends in 3 years. SBT and LLS fluctuated significantly, whereas Q&S fell sharply. In 2019, SBT and LLS both decreased their EPS to 437 Vietnam đồng and 136 Vietnam đồng. Simultaneously, Q&S also dropped dramatically to 4,300 Vietnam đồng. In the last year, while SBT and LLS experienced a rise to 595 and 301 Vietnam đồng, Q&S continued to fall substantially to 3,400 Vietnam đồng.
So moving on to the liquidity ratio. So the liquidity ratio are very important financial measurement in determining whether the company has the capabilities to pay its short-term debt obligation, or we can call it current liabilities, or the abilities of the company in converting assets into cash. And I will analyze two common types of liquidity ratios, including the current ratio and the quick ratios. So first, let's look at the current ratio. So the current ratio is equals current assets dividing the current liabilities. And according to the figure, while there was a fluctuation of these three companies' current ratio over the period, and these ratios are all greater than 1, which means that the net working capital was positive and the current assets is higher than the current liabilities. So as a result, these three companies can be able to cover its short-term liabilities and generate a good short-term financial health. Moving on to the quick ratio. So based on the figure, SBT has the upward trend in throughout the period. And why this trend is upward, the quick ratio was still low, which was lower than 1, and it may deduce that the company does not have enough liquid assets to cover its current liabilities. And the Q&S has experienced the quick ratio in 2019 and 2020 are 1.25 times and 1.33 times respectively, and these quick ratios are all greater than 1, which can deduce that Q&S has the healthy finance and can get rid of its short-term financial obligations. Next is efficiency ratio. So basically, efficiency ratio are metrics for evaluating the company competency in using resource to generate income. So there are two main sources of efficiency ratio that I will analyze, which are inventory turnover ratio and receivable turnover ratios. And in addition, day sale of inventory and day sale of receivable will be displayed to show a deeper insight into the overall effectiveness of sale inventory and in collecting receivables. So when it comes to inventory turnover, it is noticeable that 2020 was the year when SBT inventory most effectively, which are 4.34 times respectively. And conversely, the Q&S experienced a downward trend over the period, which show a low in inventory turnover and implying weak sales and exits in inventory. Next is receivable turnover. So in overall, according to the figure, SBT lagged behind of its two competitors in throughout the period, which show the deficit of the company in collecting receivables. And Q&S has the greatest times in receivable turnover, but however, this trend tends to decline over the period, which show that the company may have the insufficient collection or meeting more the customer that does not have the financial viability. Next is the day sale of inventory. So whereas the SBT day sale of inventory was slightly increased, that of LSS fell sharply, which means that LSS itself is inventory more quickly and possibly clear of its inventory, while SBT tend a bit struggling in managing its inventory. Next is day sale of receivables. So in the day sale of receivables, SBT was at its highest point in 2019, which can deduce that SBT may face many challenges with debt collection or the financial situation or major customers. And LSS experienced a downward trend in the number of receivable days, which can possibly deduce that the shorter the amount of time that the company can get its receivables. And next is the long-term solvency ratio presented by my teammates.
For the next part, I will talk about a long-term solvency ratio, which includes the ratio belong to debt and the time interest earned ratio. So the first one about ratio belong to debt, I will talk about the total debt ratio and debt to equity ratio. As you can see from the figure here, the total debt ratio of SBT was 0.58 in 2018, and it declined slightly to 0.47 in 2020. With a similar trend, debt to equity ratio witnessed a decrease by 0.6 from the first to the final year. Though we all know that the total debt ratio and debt to equity ratio are metrics for assessing a company's financial leverage, as a high total debt ratio and debt to equity ratio will mean that the company relies more on debt when funding the assets. So with such a figure like that, SBT relies heavily on debt rather than equities when funding the assets. So because of the total debt ratio and debt to equity ratio is quite the same when examining the firm's capital structures about debt. So we just focus on the total debt ratio when we compare SBT with its competitors. So as can be seen from the figure here, the ratio for LSS and QNS was much lower than SBT, which means the two competitors rely less on debt than SBTs, and stakeholders may find it less trickier to invest in them in comparison with SBT in the same industry. Then about the TAA ratio. TAA ratio is an indicator of a firm's ability to meet its interest obligations beyond its current earnings. So the higher the TAA ratio, which is typically greater than 2, the better the company's abilities to pay its interest is, and vice versa. And as you can see from the figure here, the TAA ratio for SBT and LSS were much lower than 2, which means these companies were not too good in guaranteed debt repayment. And for the QNS, the TAA ratio is much higher than 2 competitors and higher than 2, which means LNS was the one who created the most positive cash flow and ensure debt repayment among the 3. And about profitability ratio, we will talk about a profit margin, return on assets, and return on equities. The first one about profit margin. Profit margin can be used to measure how profitable a company's or business activity is. And as you can see from the figure here, the profit margin of SBT and LSS declined during the period, which means the two companies did not do so well in creating profits. Why is the opposite for QNS with a high and increase in profit margin? So QNS was a company that generated the most profits from sales and effectively control its costs to maximize the bottom line. About ROA and ROEs, as you can see from the two figures here, ROA and ROE of SBT on fell over the period, which means SBT did not do so well in creating returns on assets and on equities. For the LSS, although the figure was increasing over the period, but it was lower, and LSS did not do well too. By the opposite, the QNS with the highest ROA and ROEs among the 3 companies was the one who had the most outstanding performances in managing assets and raising capitals to make profit. A key point we have to mention here is the financial leverage that we got. ROA divided by ROAs of SBTs was highest among the 3, which indicates that the companies worked positively in paying back debt and minimizing its financial risk. And we will talk about the market value ratio, which consists of the PE ratio and the market to book ratio. The first one about the PE ratio, as you can see from the figure here, the PE ratio for SBT increased by nearly 7 during this period, and the figure was too high, and it is the same for the LSS and the QNS. So usually a higher PE ratios are frequently interpreted as implying that the company has strong future growth prospects. However, in this case, using only PE ratio will be subjective and not convincing, as EPS and other statistics numbers of all 3 companies vary a lot during this period. So alternative option for this situation is comparing the reversal equation, which is the earning yield with cost of equities. And as you can see from the research we have, calculated here. The earning yield for 3 companies were lower than their cost of equity, which means all the trees did not have promising growth prospects during this period. 10 about the market-to-book ratio. The market-to-book ratio is a measurement that compares a company market value to its book value. For SBT, its market-to-book ratio was higher than 1 for all 3 years, which means the firm operated well in order to make profit and create value for its shareholders. For LSS, the ratio was very low, which means its stock was undervalued, and it is the opposite for the QNS, and its stock was trading at a premium price to its book value. And the last part of our presentation is the conclusion. So from what we have calculated and analyzed before, we conclude that SBT operated quite well in overall during the period from 2018 to 2020. However, we can deny that the companies also had some positive developments and the capital structures with credit improving and debts were decreasing. They managed inventory efficiently and they were positive in paying back debt and minimizing financial risk. However, the issues were bigger. It was risk for investors when EPS was decreasing a large numbers over time. Also, the ROA, ROE, and profit margin on fell during this period. The companies faced many challenges in debt collection. The capital structures were still heavily financed by debt, but they were not too good in guaranteed debt repayment. So based on what SBT has done and faced, we also have some recommendations for them to enhance their performances for the following period. The first, they should reduce the amount of debt in their capital structures to ensure interest payment. And 10, they should improve their operating performances, balance between the ratios for investors to be easy and sure to invest in them. So that is the end of our presentation. Thanks for watching and hope you have a nice day.